Good evening, students. We are starting today a session on the topic specifically under taxation GST, and we will be covering the all the chapters starting from introduction, supply, up till payment. All the chapters will be covered, but this will not be a extensive study wherein you will be taught each and every concept because the recordings are being uploaded of the previous sessions. So request you to kindly view the recordings, and these sessions are specifically for you to clarify your queries and any doubts what you have, right? So in that process, if there are any questions, you could let me know and we are good to start. I think I could see a lot of students who have been in the past and I have taught them in the previous session, and good to see you all again here. And there are few new students also. To give a brief introduction about myself, my name is Deepak Jain. I am a chartered accountant and a practicing company secretary. I practice in GST matters, company law, and accounting matters. I have my practice in Bangalore, and I qualified as a chartered accountant in November 2008, and I've been in practice since then. My association with Institute started pre-COVID, wherein I was selected as a faculty for the topic of GST, and I've been continuously been delivering a lot of sessions on GST to students of intermediate, and many students have come back and they've responded saying that the GST study was very helpful to them. I'm glad that I could help them. So what I would say is my contribution is only 20%. Balance 80% is how much efforts you put for the subject, how much efforts you put in, and I can only be a catalyst to help you understand the topics. And my emphasis has been on teaching the concepts. So once you understand the concepts, then you can apply the concepts on practical questions. You can apply the concept even in your theoretical answers. So that's why my sessions would concentrate on the concept. So if you understand the concepts well, then everything becomes easier. And indirect tax specifically is a scoring subject. You can gain good marks in this and accelerate overall the group and take up your numbers to a greater level. So that is the reason this is a mix of practical and theoretical subject, because if you know the theory well, then you can apply practically. So that's why this becomes a scoring subject for you. So today we will go through the introduction, and we will also touch base on the concept of supply, because we know that the very important topic is supply in GST, because if there's no supply, then there's no GST. But we will see that how best we could cover up the concept of introduction. If time permit, we'll take up supply because we don't want any topic to be closed up in hurry. If we have sufficient time, then we will take up supply too. Okay. In any other queries which you have, please restrict your questions to that topic, because if you deviate, then you will not understand that day's topic. So request you to keep the topics, keep your questions confined to the day's topic. Okay. You could ask your questions. If you don't have any questions, then we can start. But just let me know if you have any questions. Okay. Since I don't see any questions, let us get into the main topics under this topic of introduction under GST. GST needs no introduction actually, right? Because we are all aware of GST and we are practically using this GST very much when we buy something, okay, when we pay somebody, we we are getting affected by GST in terms of we do get the pinch of the GST when we do any transaction. A simple transaction of using a motor vehicle, using a Ola Auto or a Ola cab, we pay GST on that transaction also. So every simple transaction is also affected by GST. So we are all consumers of GST. Okay, we may not be uh, well aware of the GST provisions. Nevertheless, we are paying GST in our day-to-day activities. So how do we pay GST? Indirectly, because the government doesn't come and ask you that you pay GST to me. You have bought a paste and you have not paid GST, you pay GST to me. They will not come to you. They will come to the seller who has sold that paste to you. That's the reason it's a indirect tax, wherein tax is paid by the supplier. The shopkeeper who has sold you, he's the supplier. GST will be collected by him. You are the consumer, so you pay the taxes ultimately on that toothpaste. But the tax is governed in such a manner that they cannot reach to the end customer. So that's the reason they reach out to the supplier. So the supplier pays it on the consumption. If the consumer is also a registered person, then he can claim the credit. If he's not a registered person, that becomes a cost to him. Okay. This is a basic introduction of GST. What is tax? Tax is a pecuniary burden. Nobody wishes to pay the taxes out of their own will. So there has to be a power given to the government, okay, and that they have to exact it from the individuals or from the companies. So it is a pecuniary burden which is laid upon individuals and landowners to support the government, and it's a payment which is exacted by legislative authority. Basic tax system in India is simple. We have direct tax, we have indirect tax, then we have tax on tax also. So what's a direct tax? Tax which is paid by an individual on his earnings. Income tax is paid also by a company on the profit what it makes, on the income what it derives. So the tax which is paid on an income is income tax. The income tax paid by a company is called as a corporate tax. Agriculture tax is also another example of direct tax. In indirect tax, we had around close to 10 enactments wherein indirect tax was levied. But luckily, with the introduction of GST, all of that has been subsumed and has put into one window wherein all the indirect taxes have come together and collated as GST, which is called as goods and services tax. Then we also have a customs duty. When I said just a minute ago that all the taxes has been collated and combined in GST, then why is this customs duty still there? Customs duty is still there because when we import any goods, okay, when we import any goods, the customs authorities have to have a check. Every country needs to have a check. So that's the reason when we import something, at the time of clearance of those goods, we have to pay customs duty and GST. So on import transaction, we have two duties, customs duty and GST, which is payable. Is this GST an additional charge for me? No, this is not an additional charge. This is a creditable GST. If I'm a manufacturer, I am procuring raw materials from a foreign country, then this procurement, okay, on this customs duty which is paid is a cost to me because that can't be claimed as a credit. But the apart from customs, what GST is being levied, this GST is a credit to me. The manufacturer can claim this credit and utilize this credit against his outward supplies. Okay, that is the concept of customs duty and GST. Then we have tax on tax. We know that we have to pay cess, we have to pay surcharge. That is the concept of tax on tax. To a minimum value, to a small percentage, tax on tax still exists. Okay. Direct tax, indirect tax, we know the benefit, we know the difference. The incidence is borne directly by the person who is earning it. Indirect tax, the incidence is shifted, like how we saw the example of a toothpaste. It is progressive in nature, as in when your income increases, your the tax portion increases. But indirect tax is not progressive; it is regressive. Why is it so? A rich person also buys a same soap. A poor person buys the same soap, but both of them pay the same tax, right? There is no progressive income. There is no progressive tax collection. When a person who is wealthy, he also procures the same product, he pays the same tax, and a person who is not so wealthy, he also pays the same tax. So it is not progressive in nature. It is opposite of progressive, which is regressive in nature. Example of direct tax is income tax, and examples of indirect tax is GST and customs duty. Now, what were the taxes before GST came in, which I said that it got subsumed? We had excise duty, we had service tax, excise duty, service tax, additional duty of excise, right? What is additional duty of excise? We have excise. Then what is additional duty of excise? Like how I import today and I pay customs duty and GST. Before GST, there was excise duty. So when I import any goods into India, the Indian manufacturer used to suffer because his prices used to be high. And any person used to import, his prices used to be less because he was levied only customs duty. Then these manufacturers said there is no level playing field for us. We are not in par. Our prices are very high than when they import anything. So then the government said, okay, the reason is because we are levying excise duty on you when you're manufacturing, and the person who is importing, he's levying only customs duty. So we will also levy another duty, which is called as in lieu or equivalent to this excise duty. We will levy same duty when they are importing. So customs duty plus additional duty of excise. So that was what is the levy on called as ADE, additional duty of excise. Then these were the taxes which were paid to the central government. Service tax, excise duty, surcharge and cess and ADE, all of this were paid to the central government. When it comes to state government, we used to pay VAT. And if there is any transaction of purchase from one state to another state, we used to pay purchase tax and entry tax. Also on some luxury items like going to a cinema theater, we used to pay luxury tax. All of this has been subsumed under GST now. And IGST is a transaction is so we have two things: central goods and service tax, which is called as CGST. We have SGST, which is called as state goods and service tax. Then we have a third category called as IGST. Now, what got subsumed under IGST was central sales tax. Whenever there used to be any transaction from one state to another state, we used to pay something called as a central sales tax, and a countervailing duty and special additional duty. All of that has got subsumed. Okay. Where should we post our query? Nistala, you can post your query on this place itself where you have asked the question. You can post it over here. It will be visible to me and I will answer it. Okay. So these are the taxes which got subsumed. Features of indirect tax. These are theoretical part. You can read this. The journey of GST is presented here so that you know from where the GST started and where it ended. This is also theoretical. What topic are we covering today, Manav? We are covering GST introduction. We are covering the introduction, and then if time permits, we will go through your questions, and then we will also go through your concept of supply under GST. Now, this is very important to understand how the GST works. Okay. Before that, I will share with you a Excel wherein how the GST tax is calculated will be shown to you. Now there is a question wherein Venkatesh is asking, sir, why GST is made as a consumption-based tax? Okay. So Venkatesh, very good question. GST is a consumption-based tax because whoever consumes, that is the place where taxes has to go. If it is the corollary of consumption is origin-based tax. So if some goods are origined or manufactured, say in the state of Karnataka, the taxes will go to the state of Karnataka. But after the goods are manufactured, they are transported to a neighboring state of Tamil Nadu. Now, when this goods reaches Tamil Nadu, the consumer over Tamil Nadu is consuming it. The Tamil Nadu government said that consumption is my state. Why am I not getting the taxes on it? So there was a dispute because the earlier VAT regime was under origin-based tax, wherein the consumption used to happen at a large level in different states, but the taxes was not enjoyed by them because taxes was based at the origin level itself. So the government said origin-based taxation will not help to develop the states. So that's why we will have to move from origin-based tax to consumption-based taxes. So let us move to consumption-based tax. So if you have manufactured something, you will collect the taxes and but the taxes will ultimately go to that state which is consuming it. Now, consumption means either direct consumption or indirect consumption also. What do I mean by indirect tax? Indirect consumption is I manufacture something, I manufacture a product, and that becomes a raw material in another state. This another state of Tamil Nadu, somebody is procuring it and he's further using it as a raw material and manufacturing something out of it. So the goods have moved from one state to another state. I have manufactured it. Now it is getting consumed or it's getting utilized in another state. So the taxes has to go to that state, right? So that's the reason this movement taxes has to move along with the goods so that there is no leakage of any revenue. That's the reason the government brought in this system of consumption based tax so that the consuming state can get the benefit of the GST. Clear? Hope I have clarified, Venkatesh. Okay. Now, I will share with you an example of how GST is to be calculated or GST is to be considered so that we know what happens pre-GST and in GST what happens. In pre-GST, a manufacturer used to sell some goods. He used to charge excise duty since he's a manufacturer. On manufacture, we used to pay excise duty. So excise duty was levied at 10%. And then since there is a component of sale also, sales tax also would come, sales tax or VAT. So VAT at 14.5% was to be levied. Now this was levied on the base value of your sale value, not on what a sale value, which is value of the sale price plus excise duty. On this value, VAT used to be charged. So what used to happen? On the base price, you don't pay tax. On the base price, you only pay excise duty. VAT you pay on excise duty plus sale value. So on this 11,000, there used to be another tax. Ideally, it should be only on 10,000, right? Because my sale value itself is 10,000. So you charge on 10,000, charge me 1,450 on 10,000. But the VAT law didn't permit this. VAT law said that whatever is the value you are agreeing with your customer, inclusive of taxes also, that taxes will be the base for the levy of VAT. So this is called as cascading effect, tax on tax. So VAT used to be charged even on the excise duty. So the price used to be 12,595. Now from this manufacturer, it goes to the distributor. This distributor, we will sell that product at 15,000. He used to charge VAT. He is not a manufacturer, so he will not levy any excise duty. He will just levy VAT. Will he get the credit of this excise duty? No, he's not a manufacturer. He is not under excise regime. So excise regime was the central government's regime and VAT was a state government's power. So excise and VAT never used to handshake. This becomes his cost. So he will not get the credit of this 1,000. He will get credit of the VAT what is charged, provided they are under the same state. If it is under different state, that also even he would not get a credit. So this 5,595 was a credit which was available. So from the 2,175, he could reduce 1,595. His costing would use to work out at 15,580. Now his selling price, cost price for him would be that he will charge VAT and reduce input. So his pricing used to go up. Then the retailer, when he used to sell at 18,000, he will again charge VAT. He will claim back the credit of VAT which is charged by his distributor. So the ultimate cost for the consumer would be 18,000 plus 2,610, 20,610. So that is how interplay of excise and VAT used to work out. Now, under the post-GST regime, the same product, if it is sold at 10,000, no excise duty. GST say on this product, it is levied at 5%. So you'll just levy 5% on the 10,000 rupees. So there is no tax on tax. That effect is gone. Then the distributor, he will sell at 14,000. He will charge VAT at 700. That is 5% on 14,000. He will get the credit of 500 and the price will be 14,700. Why the value of the product is reduced here? Because his cost price for the distributor was high. So he used to charge a higher sale value. Here under GST, his valuation the cost value has come down. So he will charge only 14,000. Ultimately, retailer will sell it at 17,000. Earlier, he used to sell at 18,000. 17,000 he will sell, charge GST at 5% and claim credit of 700. And then the ultimate cost to the consumer would be 17,850. So that's how we see that the taxes from VAT regime to GST regime, the prices of the product has come down, provided I have taken the example of GST rate being 5%. If the GST rate is 12% or 18%, then that may not be true. So, however, the government has tried to bring down the VAT rate on those goods which were levied at lower rate to bring them at lower rate. When the products used to be levied at a higher rate before, they will be continued to levy at a higher rate. Clear with this example? Okay. So that's how you will see that what is the concept of GST in India? It's a value added tax, which means there has to be tax only on the value addition on each stage. We saw from manufacturer giving it to a distributor, there is a value addition. And a distributor giving it to a consumer, he used to charge on the full value and reduce the taxes what is levied by the supplier. So effectively, he is paying tax only on his value addition. So either you say value addition is 20 rupees, you pay VAT on 20, or you say you pay you pay GST on 50, and then reduce the input tax credit to the extent of your purchase of 30. 50 minus 30 is 20. That is the value addition which we are indirectly arriving at. Because if you just directly say that pay taxes on the value addition, the mechanism will be very, very strange. You do not know what will be the value addition which you are levying. So the best method is the sale price. You will always negotiate a sale price with your consumer, and the consumer will not pay you more than what is the actual value of it, right? if there is a competitor who is selling some goods at 500 rupees, and if you are selling at 700, the consumer will tell that no, I will not buy from you because there is a competitor who is, say, this is the same price, same quality, and everything. Then you will not pay higher, right? So the consumer drives the pricing of the products. So that's the reason GST was based on the value, that is the sale value, what you agree with your customer. On that, you charge the GST. Okay. So it is a tax on value addition. It is a continuous chain of tax credits. A manufacturer selling to a distributor, distributor gets the credit. Distributor selling it to a retailer, retailer get the credit. So this chain continues fully in the sale transaction. The chain continues unless and until a consumer comes in between and he consumes it, the chain is broken. Until then, the chain continues as it is. Okay. The burden is borne by the final consumer. That's where the credit stops, the credit chain stops, and the ultimate tax burden is borne by the final consumer. There is no cascading of taxes. Like how we had seen, excise duty was not claimable. That was one example of cascading effect. Tax on tax used to be paid. That was another example of cascading of taxes. Under GST, there is no cascading of taxes. There were some deficiencies under the VAT system. That is why we have moved now to GST system. Framework of GST is again a theoretical aspect. Please read through it. And if there's any queries, you could please raise your questions. This is very important. How does the flow of credit work? Before that, let me know if you are clear or do you understand what is CGST, what is SGST, and what is IGST. Cascading effect, Sushil Kumar, is when I pay taxes and I don't get credit of it. That is called as a cascading effect, wherein I am paying some tax, but I don't get the benefit of it. I don't get the credit of it. That is called as a cascading effect of tax, wherein two levies are there. They are legal levies, but unfortunately, due to the structure, I cannot claim the credit. That is cascading effect. Okay. So you answer my question. If you make any interstate transaction, a supply of a interstate nature, what taxes would you pay? Correct. So for a interstate transaction, you will pay IGST. What will you pay for a transaction of intrastate? Correct. CGST and SGST. Only CGST? No. Somebody is saying only CGST? No. For a interstate transaction, we pay IGST, and for a intrastate transaction, we pay CGST and SGST. Okay. Not only SGST, it will be CGST and SGST. So when we say the GST rate is 18%, that is the rate of IGST. CGST in such a scenario will be half of IGST rate, 9% CGST, 9% SGST. So it is equally divided between CGST and SGST in case of a intrastate transaction. Okay. In case of an interstate transaction, the whole rate applies. In case of an intrastate transaction, half of the IGST rate will apply. Okay. So you're clear now that in case of intrastate, it is C and S, and in case of a interstate, it is IGST. Very simple question. Now, what happens in a case of import? Import of goods. I've imported goods within my state of Karnataka. There is a port in Karnataka. I've imported there and I have cleared it. So what will be the tax will I will pay? Will I pay CGST plus SGST or will I pay IGST? Rupa Shri is saying CGST and IGST, CGST and SGST. Sumit is saying it is IGST. Yes. In case of the example, the question what I was asking is, I have imported, CGST, what is interstate, what is intrastate. Now, in case of import transaction, when I'm importing some goods in the state of Karnataka, I'm importing in a port in Karnataka and I'm clearing it to my place, which is also in Karnataka. So, will there be a levy of CGST, SGST, or IGST? Is the question. IGST, okay. So there's only one student which is saying it is CGST and SGST compared to all other students who are saying it is IGST. Why is it so? Because of the fact that when I import something, it is always treated as an interstate transaction. Imports are always interstate. So when I import something, could be from the same port within the same state, still I will pay IGST. In that case, it will not be treated as an intrastate supply. It is always an interstate supply because imports, the port can be outside your state or inside your state. It will always be considered as a interstate transaction, and even on imports, you have to pay IGST. Okay. Mallappa avare, you are clear with this, that on import, it is always IGST, not CGST and SGST. Okay. So now we know what is CGST, SGST is when there is an intrastate transaction, and IGST is when it's an interstate transaction. Now, how does the credit flow happen? Somebody has supplied you goods from outside the state. They have charged you IGST. Even importing from intrastate, it will be IGST. Yes, there's nothing called importing from intrastate. You always import from outside India. You can't import within India. Correct? So you're always importing outside India. That's why it's called imported. So when you import something, you can import it from a port within your state or from your port outside your state. Irrespective of this, that doesn't matter. You will pay IGST because imports are treated as a interstate transaction. Now, we know what is CGST, SGST, and we know what is IGST. So when a supplier is supplied some goods to you, he is charged IGST. Now, when he has charged you IGST, you will get the credit of IGST. And Another transaction you have made within the state, and when you made a transaction within the state, the supplier will charge you CGST and SGST. Now, what will you do with this? The CGST and SGST, what is being charged, what will you do with this credit? And what will you do with the credit what is being charged by a supplier who supplied from outside the state? Because you are also a trader, you will also trade in these goods. You can also trade outside the state or you can trade within the state. If you have customer outside, you will not sell, you will sell. So what do we do with the credit is the question. So this is how the credit flows. You have a CGST credit, which is called as input tax credit. The ITC meaning is input tax credit. If you have any CGST credit, you will utilize first against CGST and then against IGST. Then if you have any SGST credit, you will utilize against your any SGST liability, then with your IGST liability. Then if you have any interstate purchases, you will utilize this IGST credit against the IGST first, and then that's the twist. Till now, we understood very clearly like with like. So any CGST credit, I will utilize against my CGST liability. And if there's anything left over in my CGST, I will utilize for payment of any IGST. Same thing goes with SGST also. Then we have a credit which is called as, what is IGST by the way? Is it Interstate Goods and Service Tax or is it something else? IGST does not stand for Interstate Goods and Service Tax. It is Integrated Goods and Service Tax because it integrates the center and state. So that's why it is a Integrated Goods and Service Tax. So any IGST credit can be utilized for payment of any IGST output liability. Then if something is left over, it can be utilized for payment of CGST or SGST in any proportion. Then equal proportion is not necessary. You utilize your IGST credit for your IGST liability first. Then you utilize for your CGST and SGST liability in any proportion. Clear with this? Awesome. So this is how the credit works. When we go to input tax credit, we have to revisit this slide, but understand how the credit mechanism flows. Are you all with me? Can we proceed further now? Okay. There is a explanation on this, which we will again go through to our favorite Excel sheet and understand, because we will understand this with numbers much better than just theoretical thing. Okay. So we know the name of cricketers. So that's why I have associated those cricketers with the respective states. Our old Rahul Dravid, he is selling some goods to Anil Kumble. Both are in the state of Karnataka. The value of supply from Rahul Dravid to Anil Kumble is 10,000 rupees. He is charging CGST at 9% and SGST at 9%. Total price charged is 11,800. Now this CGST, what he charges, he will pay it to the central government, correct? So the revenue CG is central government. Revenue to central government is 900 rupees. And this SGST is a state goods and service tax. They are in the state of Karnataka. So 900 rupees would go to the state of Karnataka, right? Because it is an intra-state transaction, I have charged CGST and SGST. Then supply outside the state. Anil Kumble is supplying to Sehwag in Delhi. It is an interstate transaction. You have told me that if it's an interstate transaction, you have to pay IGST. So he is supplying the same goods of for value of 12,000 rupees and is charging IGST at 18%. Fine. He is charging him a price of 14,160. Now, when he's charging this 2,160, he had purchased from Rahul Dravid. Now, the taxes what Rahul Dravid has charged him, he is a registered person. He can claim the credit. So when he pays this IGST in the flow chart we saw, IGST credit if he have utilized with IGST payable, is there any IGST credit he has here? No, he does not have any IGST credit. He has CGST and SGST credit. So I will utilize the CGST credit to the extent of 900 rupees. I have payable of 2,160. I need full lot of credits. I have 900 rupees CGST credit. I will reduce that. Then I have a credit of SGST of 900. That also I will utilize, right? Because I can utilize the credit of CGST for payment of CGST first. I don't have any CGST liability, so I don't pay anything over here. I will utilize for payment of IGST. Similarly, SGST I can utilize for payment of any SGST liability, which I don't have anything over here. I will utilize that SGST for payment of IGST. So 900, 900, I will reduce and I will pay IGST to the government because it's an interstate transaction. I will pay 360 to the central government. So what happens? The credit of CGST, credit of SGST, when it comes, the government has to pass on the credit. So they will take away 900 rupees from Karnataka government and give it to the central government. Okay. So 900, what credit Karnataka government had at the back end, the central government will take 900 from Karnataka and give it to the kitty of the central government because the intrastate transaction now became an interstate transaction. Okay. And the CGC 360 goes to the government. 900 was already there with the central government. Now also it has to go to the central government. So no changing of hands, but only for the SGST, there is a hand change and there is a new credit of 360, which is getting added to the central government. Clear till now? Okay. Next, when this Sehwag supplies to Ishan Sharma in Delhi, both are there in Delhi. Why Karnataka government sends 900 to center? Because GST is a consumption-based tax. Now, taxes, when the goods are moving from one state to another state, the taxes also has to move. Had this person consumed the goods in Karnataka, Karnataka government can utilize full 900. Now, when the goods have moved from one state to another state, the taxes also has to move along with it. I am charging IGST by utilizing the credit of SGST. That's when the central government knows that, okay, somebody is utilizing the credit of the state government. So I have to take that much credit from the Karnataka government and give it to the central government. So when the goods are moved, the taxes also moves. Okay. So this 900 moves from the kitty of Karnataka government to the central government. Then what happens? There is a sale within Delhi. The value of this supply is 14,400. He will charge CGST of 9% and Delhi SGST. Each SGST is different. Karnataka GST is different from the Delhi GST. So when the goods are moving within the state of Delhi, the GST will be charged as CGST of 9% and Delhi GST of 9%. The total price for the supply is 16,992. Now, what is the CGST payable? The CGST payable is this one, 1296. Now, what did Sehwag do? He has bought it from Anil Kumble. So, what did Anil Kumble charge him? He has charged him IGST. So, he has charged him this IGST of 2160. So, this 2160 is available as a credit to Sehwag, right? He is making a transaction of CGST. Can he utilize credit of CGST? Yes. But does he have anything? No. He has only credit of IGST. Can he utilize that? Yes. So he will utilize credit of IGST. So 1296, what is payable on my sale transaction, I will pay it through the credit of IGST. So I have a credit of IGST of 1296. Is that? Then what is payable to the government? Nothing, because I'm utilizing the credit. Then SGST, how much is payable? 1296. Can I utilize the credit of SGST? Yes, I can. But do I have any credit of SGST? I don't have any credit. Zero. What credit do I have? I have credit of IGST. But IGST I've used something. No. Yes, I have credit of 2160, out of which I've utilized credit of 1296. Balance, what is there? I can utilize. So I will utilize credit of the balance IGST 864, and balance is payable to the state government of 432 rupees. So what happens in this process? SGST was payable 1296, which means 1296 should go to the state government because consumption is happening for a sale within Delhi to Delhi. So 1296 has to go to the government. 864 will get transferred by the central government from the central government's kitty to the state government's kitty. They will reduce this from the central government. Why? Because I'm utilizing the credit of IGST. So I will utilize the credit of IGST and pay SGST. So 865, 864 goes to the Delhi government. 432 I pay in cash. That also goes to the Delhi government. So 1296 goes. So 1296 on the whole transaction has to go to the state government, which has come. Karnataka government, nothing, because the goods have moved out of Karnataka. Central government has to get 1296 by addition and net off of all of this transaction. Central government is also getting 1296. That is how the whole transaction flows in. You can please go through this and let me know if there's any questions. Explain the three question part of third question part of SGST set off. Okay. So this part, yes. So SGST payable on this transaction is 1296 because on 14,400 sale value, 1296 SGST is payable. How will this be offset? Okay, SGST payable is 1296, but the trader or the taxpayer said that I have credit of 864, let me use it. Okay, Baba, use the credit. SGST, when you're paying, you can utilize credit of IGST. ठीक है, use कर लो. How much of IGST you will use? You will use the balance IGST because I had credit of 2160. Out of 2,160, 1,296 I've used for payment of CGST. The balance kitna bacha? 864. Utilize this 864. You have utilized it. 1,296 minus 864 gives you payable of 432. Jitna credit tha, you have exhausted. So after, what will you do after that? You have to pay it from your own pocket. So you will pay 432 rupees. So 432 will go to the state government, and the 864 government will pass to the Delhi government from the central government's kitty. Okay. So what do we understand from this chart and original presentation? CGST credit can be utilized for CGST, then with IGST. SGST credit can be utilized with SGST, then IGST. IGST credit is a special credit, can be utilized with IGST and CGST and SGST. But a right question has come at a right time. Can I utilize CGST with SGST, or can I utilize SGST with CGST? Oh, what? There's a cross mark, which means yes, you cannot utilize. CGST cannot be utilized with SGST. SGST cannot be utilized with CGST. They do not recur, they do not concur with each other. So CGST cannot be utilized with SGST, and SGST also cannot be utilized with CGST. Awesome. This is continuation of the framework of GST in India. One important point to be noted here is on point number 12. GST is a tax on goods and services. Exception to levy of GST are there are some products and some commodities which are left outside the GST regime. Everything moved into GST, but some essential products, central government said that we cannot bring it into GST. State government also said we cannot bring into GST. What are those products? Alcoholic liquor for human consumption. These 5 products are very important because they are outside GST. That doesn't mean they are free from taxes. Some other taxes have been levied. We have to be clear with this. Alcoholic liquor for human consumption, on that, state excise duty and state VAT is being levied. On alcoholic liquor for human consumption, state excise duty and state VAT is still being levied. So VAT is not completely gone. State excise duty is not completely gone. On alcoholic liquor for human consumption, excise, state excise, central excise is different, state excise is different. State excise and state VAT are still being levied. On petroleum, crude, diesel, petrol, airline turbine fuel, and natural gas, central excise duty and VAT is still being levied. Okay, old regime. In alcoholic liquor, state excise; in petroleum products, central excise and VAT. And on tobacco, central excise duty and GST is still levied. Both is levied. Then opium, Indian hemp, and narcotic drugs. On that, state excise duty and GST is still levied. On immovable property, specifically land. There would be only on sale of land, no GST is levied. Okay. Building, on building GST is levied, but on land, it's an immovable property, so no GST is being levied. Okay. Okay. Moving forward, what are the benefits of GST? It benefits to the economy, advantages to trade and industry, the tax compliance is in easy. What is CST? Good question, Abdan. In our previous slide, we have mentioned this concept of CST. So VAT is standing for value added tax. That is a tax on the intrastate supply, intrastate sale of goods, because that time supply concept was not there, sale concept was there. Whenever there used to be sale of any goods, VAT was levied. And under CST, if there is a sale, interstate sale, on the interstate sale, CST used to be levied. CST stands for Central Sales Tax. VAT stands for Value Added Tax. CST stands for Central Sales Tax. Whenever there is a transaction of sale of goods within the state, then VAT was levied. If there is a transaction of sale of goods outside the state, then CST or Central Sales Tax was levied. RCM, Sriram will come to RCM. RCM stands for reverse charge. In our next chapter, we will cover that. Okay. Very important next is to understand the concept of constitutional provisions. What are the constitutional provisions which are relevant and how does the structure work? GST in India, if you see the history graph, what I had shown, GST in India was founded, or the foundation was laid way back in 2009 and 2010 itself. The government wanted to bring the GST in India in 2010 itself. Then what was the problem? The constitution had a power, had given the power to the state government to levy some taxes, had given some power to the union government to levy some taxes, and some power to the local government. But GST did not want to give powers only to the center or only to the state. It wanted to give simultaneous power to both the center and state, which means what? On an intrastate supply, they didn't want only state government to get taxes or only central government to get taxes. Both have to get the taxes on an intrastate transaction. Did that constitution permit it? Before the amendment of the constitution, there was no such provision. Constitution said simple, I will give you three lists: union list, state list, and concurrent list. Anything what is there in the union list, the power is to the central government. Whatever is there in the state list, the power is to the state government. Okay. And whatever is in the concurrent list, you will decide. But GST couldn't fall under the concurrent list also, wherein both of us can, one person collect and other person distribute. So they had to make a amendment in the constitution. That's when, by way of the constitution amendment, this amendment happened, and Article 246. So this was the list before constitution. List 1, list 2, list 3, union list, state list, and concurrent list. This was amended by the 101st Amendment Act, and new Article 246A was introduced. through this new 246A, power to make laws with respect to goods and service tax was jointly given to the central government and state government. So both central government and state governments had the joint powers to charge GST. Okay. So 246A is an important amendment section. Because of this 246A, we are seeing that GST is having a life now. So apart from 246A, there were other amendments which were made. Article 246A is important. Article 269A is also important. Article 269A gave the levy and collection of GST power on a interstate supply and on import, which means on any interstate supply and on import, which we have discussed a couple of minutes ago, the power came from Article 269A, because on import, which state will levy the GST, that will become confusing and they will lose power. Okay? So that's the reason on a transaction of interstate, the central government will collect the taxes is what 269A is saying. So 269A gave exclusive power, special powers to the central government, saying that on all interstate supply and on import transaction, you central government will have the power to collect taxes. That's why on all import, even if it is a import within my state, port is in my state and I'm clearing it. By logic of supply, it is an intrastate supply, but it's an import. So I will pay on import transactions IGST itself. Then Article 279A. A means all of this is amended. So 245, 246, 247 is there. They wanted to bring in between something. So whenever they bring any amendment, you'll see that 69A, section 69A, which means 69 was there, then 70 was there. They wanted to bring something in between. They cannot rejig all the sections. So they add a suffix to the sections. So 69 and after that 60, 70 is there, they will bring 69A. So Article 246 was there, 247 was there. They wanted to amend this 246, so they couldn't insert any new section, so they inserted 246A. After 246, 246A comes. Then if there is 246B, 246B, after that 247. Okay. Power to make laws with respect to goods and service tax. There is a joint power to the state government and the central government. Then Article 269A, levy and collection of GST on interstate supply and import. Then Article 279A gives power to the GST Council recommendation, and to the state government, and it has members and the voting powers are mentioned. Then Article 366, which gives the various definitions. So that's how the constitution part is relevant. I've reproduced the articles, which may not be very much relevant, but you will have to read this to understand what is Article 246A and what powers it gives. Yeah. Any questions before we get into multiple MCQs? Okay, so let's get into the multiple choice questions. Which article of the Constitution contains the power to make laws with respect to goods and services tax? Article 279A. Option A, correct. Everybody except one has given a correct answer. The correct answer is Article 246A, not 279A. The correct answer is Article 246A. Second question. GST came into force by the which Constitution Amendment Bill? Is it 111th Amendment Bill or 101st or 102nd or is it 122nd? Hundred and one. Okay. Everybody is saying it is 101. Okay. So your since majority are saying 101, except Sriram who is saying it is 122nd. But I should go with the majority, right? We are a democracy country. So we go with voting system. Since the number of votes cast for 101 is major, should I give correct answer to B? No. The correct answer is not decided on voting system. It is decided based on the accuracy of the answer. The correct answer is because is 122nd because the reading of the question is important. GST came into force by the Dash Constitutional Amendment Bill. There is a difference between a Constitution Amendment Bill and a Constitution's Act. I will take you to the history slide. You will understand that better. A bill doesn't mean it gets converted into act. Various bills will be laid down. The bill which gets approved gets converted into an act. Until then, it's only a bill. Okay. So when they brought in Constitution, they brought in the Constitution 122nd Amendment Bill. That bill got converted into a 101st Amendment Act. So with respect to Act, it is 101st Act, Constitution 101st Amendment Act. But with respect to the bill, it is the 102nd Amendment Bill. Bill is laid before the Parliament. If it approves, it gets an act. If it is not approved, the bill remains as a bill. It doesn't get converted into an act. Okay, that's the difference between a bill and an act. So our correct answer is, the question is with respect to the Constitution Amendment Bill, and Sriram has answered correctly. It is 122nd Amendment Bill. Okay. Let's move to the next question. GST is one of the biggest taxation reforms of independent India, being implemented with the aim of enhancing the overall growth of the nation. It is a comprehensive dash indirect tax levy on goods as well as services at the dash level. If you are saying answer is A, if you are saying answer is C, it is a comprehensive destination based tax. It is not a supply based. Supply is a taxing ingredient. But when you say the basis, it is always destination based tax. So it is a comprehensive destination based tax. And so it is levied at state level or national level. Nishtala Unikrishnan have given correct answer. It is a destination based national level tax because GST is levied at the whole national level, not at a state level. So the correct answer is C. Question number 4. India has adopted a dual model of GST where the tax is charged concurrently by the center and the states. Therefore, for an intrastate sale, the GST as per GST Act is charged equally as what? Is it CGST and IGST? This is the simplest question. Right. Fourth one, it is B, CGST and SGST. Fifth question. The uniform The uniform policy recommended by the GST Council on e-way bill being to be implemented all over the country will be totally. So we know about e-way bill. What will it be? Correct. Everyone has given a correct answer. It is without being covered in our discussion, you still have given a correct answer. That's amazing. That means you know much of the GST part. It eliminates the check post system and it breaks the entry barrier. So both A and B, which is the option D. Next question. Various taxes which is levied under different acts were subsumed under CGST on the objective of one nation, one tax. However, certain items still continue to be taxed both under central excise and GST law, even after implementation of the CGST Act. Find such items out of the following list. All of the above. Okay. Don't answer the question in a hurry. Read the question properly, and then if you answer, you will see that they have done a mistake. Many are giving that the answer is D, but unfortunately, D is not the right answer. You have to be careful that what is the question asking you. It is asking you what is the goods on which central excise law and GST is being levied. Shambhavi has given a correct answer. Unnikrishnan has given a correct answer. Yes. Manish Magrotra and Chitkala have also given correct answer. The correct answer is C, tobacco and tobacco products. Only on these products, central excise and GST both have been levied. So don't get carried away with these MCQs. They may look simple, but in fact, they are not. We know on all these products, apart from GST, other things are levied. But the question was not where other than GST, other things are levied. The question was specifically on levy of Central Excise Act and GST law. So that's why the answer is C. Question number 7. Under the model of GST adopted by India, taxes paid on inward supplies, which is made by a registered person, is available as input tax credit, which can be utilized for making payment as per Section 14. Right? We know that it can be utilized. Now, what is the ITC of CGST can be utilized for? B, D, lot of confusion in this. Somebody is saying C also. ITC of CGST can be utilized for SGST and then with IGST. Is it so? Did we discuss that? You understood my flow chart, which I had given a very pictorial flow chart. If you would have concentrated there, you would have got the correct answer. The correct answer is okay, because CGST can be utilized first with CGST and then with IGST. I used a term called like with like, which means if there is a credit of CGST, I will utilize it against CGST first, then with IGST. If there is a credit of IGST, I will utilize with IGST first, then with CGST, and then it's SGST also. If there is a credit of SGST, I will utilize first with liability of SGST, then with IGST. So like with like is the goal. CGST credit can be utilized for CGST, and then if something is left out, you can give it to IGST also. Next question. The tax under GST legislation in India is being levied for options. Which one do you think is correct? So outwards, the liabilities of CGST and SGST will be same, and ITC, CGST, and SGST will be same. Then how intercharge adjustment will come? Not necessary. It will be same only question. You have purchased intrastate. Okay, you have purchased something within the state. So some they have charged you CGST and SGST. Now when you are making a sale, say if it is CGST and SGST, you will utilize CGST with CGST and SGST with IGST, SGST. Now what happens? Sometimes the credit of CGST gets accumulated high because you can utilize the CGST for payment of any IGST liability also. So you have utilized CGST, but SGST you have not utilized. This means the balance of SGST is gone up and CGST is less. So in that case, you may want to utilize SGST with CGST, but it will not permit. So there will not be any cross credit possibility. Okay. Going to the question on point number 8. 8, everybody is saying B simultaneously by union and state. Yes, that's the right answer. GST is levied simultaneously by the center and the state. Question number 9. Various taxes have been subsumed into GST to make one nation, one tax, one market for consumers. Out of the following, determine which taxes have been subsumed into GST. Basic customs duty, taxes on lotteries, or entertainment tax. So if credit in CGST is there, we cannot utilize the very next IGST. Correct. If there is any CGST, you will utilize first with any liability of CGST. After utilizing some portion for IGST, then you can utilize for CGST. First, you will utilize with CGST. If something is left over, then you will utilize for IGST. Ninth option B, D. Everybody is seeing D and B. They're all stuck with B and D. But the answer is not B nor D. The answer is A. Only tax on lotteries have been subsumed. Basic customs duty we had discussed is not subsumed. Okay, only Yash with repetition has given a correct answer saying it is tax on lotteries. A option is number two, which is tax on lotteries. So only taxes on lotteries have been subsumed. Customs duty has not been subsumed. Environment tax, we did not discuss anything in our slide. Environment tax has not been subsumed. So the correct answer is A, which is only taxes on lotteries have been subsumed. Why everybody is stuck with B? B says 2 and 3, which means taxes on lotteries and environment tax. No, environment tax has not been subsumed. So if you make any damage to environment, you have to pay some penalty in terms of taxes. That has not been subsumed. All the taxes, other taxes have been subsumed. Basic customs duty has not been subsumed. Yeah, environment tax is when you do any kind of a destruction to the environment. So then a penalty equivalent to tax is levied. That is called as a environment tax. Question, last question. Alcoholic liquor for human consumption is subjected to what? Taxes on lotteries is subsumed. Yes, taxes on lotteries is subsumed under GST. 10th one, A, C, B, all answers I'm getting except D, I'm got all the options by now. We had discussed this, right? I will take you to that slide again to discuss and see, because that slide nobody paid attention to that time. Now you pay attention and understand that what are the taxes which get subsumed. Now, alcoholic liquor for human consumption, on that state excise and VAT. On petroleum products, central excise and VAT or CST. On tobacco, central excise and GST. On opium, Indian hemp, state excise and GST. And immovable property, no GST. So each of this is different. You'll have to remember alcoholic liquor, state excise plus VAT, petroleum, central excise plus VAT or CST, tobacco, central excise duty and GST, and on opium and Indian hemp, state excise and GST. So all the four combinations are different, so be careful. On our option for alcoholic liquor for human consumption, both state excise and central sales tax has been levied. So it is C, both A and B. How to prepare notes for these chapters? In the study material, when you study, there itself you do your markings. At the end of each chapter, you have chapter roundup. Once you read a chapter, concentrate on that roundup, because one day before exams, you'll have to recapitulate from those roundups. So Read the chapter and read the roundups. You will get connected. From that connection, you will be able to prepare for the exam. Yes, I will share this PowerPoint. It would have already been shared, but if it is not, my PowerPoints will be shared. Okay. Since we have covered the introduction very briefly, we will take a break of 10 minutes and we will assemble back and start on the concept of supply. Okay. In the meantime, if you have any questions on this chapter, you can post it. We will clear those questions, then move to the chapter of supply. had said that we will discuss on the introduction of GST. And since we have covered the basic introduction, we could now come to the specific introduction. And important because the whole backbone of GST is on the basis of supply. So we will understand the concept of supply briefly and we will carry it up in the next session also. And I think, Shefali ji, we will have open Q&As wherein students can ask their questions. Okay, so we'll continue the session whenever you want the students to ask the specific questions through Zoom itself. Let me know. I will stop and I will take up the questions. Okay. To understand the concept of supply, we need to understand why supply is there and what is the relevance of this. Like how our sir was asking few entries, which are the entries which is relevant. So to gain a understanding of the pre-GST laws, we will discuss this. Under the excise duty, entry number 84 of list 1 of 7th schedule says what is the taxable event. In a excise duty, the taxable event is manufacture of goods. If you manufacture some goods, then excise duty is levied. So the every law will have a taxable event. In customs duty, the taxable event is import of goods and export of goods. As soon as you import any goods, customs duty is levied. As soon as you export the goods, customs duty is levied. Most of the goods are exempted when we export, so we will not find any export duty. But if that exemption is not there, the levy is definitely there that on any export of goods also customs duty can be levied. Then on the concept of service tax, the taxable event in case of service tax levy is rendering of the service. Once a service is rendered, then service tax is levied. Then on the aspect of sales tax or VAT, the taxable event is transfer of ownership of goods. It is so very specific that once the ownership of the goods is transferred, then VAT is levied. So what is the taxable event for supply for GST? Sorry, I've given you the answer. But what is a taxable event for each of the laws is what is discussed here. The taxable event is so very important that if that specific taxable event is not there, then the whole tax itself fails. So in case of a customs duty, if I do not import, I have purchased something outside India and I've consumed there itself. Okay, I have purchased a imported perfume, and while I was bringing that perfume bottle at the flight itself, it was destroyed. Will there be a customs duty levied saying that no, you have purchased it there, I have the bill copy, so you have to pay customs duty? Is it possible? What do you think? Kiran Mishra is saying yes. Pooja is saying no. What do you others think? Please repeat the question. The question is that I have purchased, I had gone to America, and from there I had purchased a perfume bottle. Okay. I'm saying, okay, I know that I'm not hiding it. Any goods which I purchase from outside India, I will pay customs duty. Now, while bringing that perfume bottle, it just got broke in the flight itself. And the customs authorities, when I did my checkout, they saw this bill and they said that you have a bill, so you have to pay the customs duty because it is importing into India. So my question is, should I pay customs duty or no? The facts are I have a bill, but I don't have the perfume bottle, which is broken. Okay, very mixed answer. Few are saying yes, few are saying no. No doubt I had purchased it, but the point is the levy. Okay, the levy is on customs duty is on import of goods. Did I import that goods? I did not import. It was either consumed, lost, or destroyed before crossing the customs frontier. So it is not imported into India. So even if I have a bill, it is not a sufficient proof that it is imported because the goods itself did not cross the customs frontier. So I do not have to pay customs duty on it because the taxable event is missing. Had they said purchase is a taxable event, then fine. But the taxable event in case of customs duty is not purchase. I have a bill. I agree with it. But it is not crossed the customs frontiers. It is not crossed the Indian borders. So I do not have to pay customs duty. So the point is, if the taxable event is not present, then there is no levy. If the levy fails, the tax also fails. So the relevance is that the tax, the levy should be attracted. If the levy is attracted, then that specific tax also gets attracted. If the levy is failed, the tax also fails. Clear? So similarly in GST we have a levy. The levy is on supply. If there is a supply, then there is GST. If there is no supply, then there is no GST. Even in supply, you have various provisions. Even if it is a supply, you have various exemptions. Even if it's supply, then you have a schedule 3. But first, supply should be there. Then you exclude the exemptions. Then you exclude the schedule 3 items. And then you pay the GST. But is it a supply or no is a primarily thing which you have to decide. Okay. So that's the reason the importance of supply is under levy, and there is a separate section defining supply itself. So section 7 defines what is a supply. Okay. Supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease or disposal made or agreed to be made for a consideration by a person in the course or furtherance of business. Very wide and detailed definition. We have just read one part of it. Okay. Supply includes all forms of supply of goods, all forms of supply of goods or services or both. So all forms of supply of goods or services, unlike VAT, where there was only goods, in services, only supply of services was there. But under GST, all forms of supply of goods and services are arrived are combined together under one concept of supply. Okay, supply of goods and supply of services, or both. There could be a transaction where goods and services both are involved. Like what? When you go to a restaurant, you eat food. You just don't eat food, you enjoy the ambience also. So it is a concept of both, wherein goods and services both are involved. That is an example of both supply of goods or services. Pure goods is when you buy something, you buy a gold ornament, it's a good. You watch a movie, it's a service, right? When it is both, it is combination of goods and services. So supply includes primarily supply of goods, supply of services, supply of goods or services, such as, which means it includes, when we say it includes, apart from it, they could have said supply means, but they didn't say supply means, they've said supply includes, which means supply is an inclusive definition. So that is the difference between inclusive definition and exhaustive definition. When they say supply means, it means whatever I say, only this is supply. When they say supply includes, our general notion of what is supply is a supply. Apart from this, the supply includes these. Inclusive definition makes the coverage wide, and exhaustive definition makes the coverage narrow. So supply includes all forms of supply of goods or services or both, such as they've given certain examples of what could be a supply. They've used 8 specific terms, which is definitely there is a supply. What are those specific 8 terms? Sale, transfer, barter, exchange, license, rental, lease, or disposal. Please remember these 8 words because this will be very helpful for you. So supply includes all forms of supply of goods or services such as sale, transfer, barter, exchange, license, rental, lease, or disposal, which is made or agreed to be made. So this is the basic theory part. Then comes the important part. It should be for a consideration. All supply should be made for a consideration. Anything without consideration is not a supply. It should be made for a consideration by a person in the course or furtherance of business. So all these 8 terms has to be bundled with 2 important aspects, which is it should be for a consideration and it should be in the course or furtherance of business. Okay. Then 7.1a was there, then 7.1b was there. Then the government thought, no, we have to do some amendment. Then they brought in between AA, right? We saw that in 269A, 279, then 79A came. But in this, though, already A is there. So how do we amend it? Bring double A. So they brought double A. Okay. So how do you stuff things is what GST will teach you. Okay. Apart from learning the law, we have to learn the art of the law. Okay. So how do you stuff something in between? A is there, B is there. So you will think I will put under D and E and F. But the government said, no, no, we have to place it at a proper place. So stuff it between A and B by bringing in double A. So they brought this double A. What does double A says? First one is supply. Second one, they said the activities or transactions by a person other than an individual to its members or constituents or vice versa for cash, deferred payment or other valuable consideration is also supply. Why did they bring this here? Because there was a lot of litigation going on the concept of anything done by a association or a club. That to shred away that objections, they brought this in the law. They said that the activities or transactions by a person other than an individual, which means if it's a club, if they are providing any services to its members or constituents for cash, deferred payment, or other valuable consideration, that is also a supply. So you could mention against this in your notes that this is a transaction of the clubs and associations. So any activities by the clubs or association, then that will also be liable to GST. So to just show away with that aspect, saying whether there is a GST or no, they have brought this now, and they've said that clubs and associations are also liable to GST. Nishtala is saying that, sir, what happens in the perfume? She's still stuck with that question. What happens if the perfume broke after coming into India? Then it would be taxed? Yes. Once it is imported, it will be taxed. After that, you break it or you drink it. The government is not worried. You have paid their taxes. They are happy. At the time of importing, was it existing? No, it was not existing. No taxes. If it was existing, then pay taxes. Then you do whatever with it. Clear? So coming to our GST, Section 7A, consideration plus business. 7B, consideration but no business. 71C, no consideration plus business. Yes, yes. That is the beauty of Section 7. So 71A, we said consideration and furtherance of business. 71AA doesn't say anything. It just says anything done by a individual, by a person other than individual to its members is supplied. It doesn't talk anything about consideration or course of furtherance of business. So that is a separate section. Then come to 71B. 71B says that import of services for a consideration, whether or not in the course of furtherance of business. First, we said both are required consideration and in the course of business. Now, 71B says you import anything. Import what? Not goods. Goods is separate, and the import of services. When you import any services, and it is for consideration. If it is for free, take it out of GST. If you have paid something, whether or not you use in your business, still it is liable to GST. What can be an example for this? Let us take some examples and understand. Import of services. What will I do? Import of services, which I don't use it for my business. I will download songs from foreign podcasts. Okay, I have to pay for it. There is a subscription. I will pay for it, but I don't use it for my business. 71A said what? It should be in the course of furtherance of business and there should be a consideration. In this case, it is not in the course of furtherance of business, still GST will be leviable. So import of services for a consideration, but not in the course of furtherance of business, still GST is leviable. Now, that podcast, what I'm downloading, for 6 months, they gave it for free. Then will there be any GST? There will not be any GST because consideration is required for that. For this first 6 months, there was no consideration, and it is used not in the course of furtherance of business, still no GST because no consideration. Once the consideration comes in, and if you don't use it for your business purpose also, still GST is leviable. Then the third activity said that 71C. 71C said the activities specified in Schedule 1, which is made or agreed to be made without a consideration. So first we said consideration, furtherance of business. 71B said consideration is required, not in business, also fine. Third is saying that activity specified in Schedule 1, it should be in the course of furtherance of business, but without a consideration, that also will be liable to GST. So Schedule 1, we will have to go and see what are those transactions which is made or agreed to be made without a consideration, but still liable to GST. In supply definition, either one is satisfied, GST applied, yes. Even if one of them, 1A, 1AA, 1B, 1C, one of these is satisfied, then GST is applicable. Not necessary that all of these conditions has to be satisfied. Donations collected by club from members. See, your example itself is wrong. A member will not give donation to the club. He will give only the membership fees. Okay. He will not donate it to himself because clubs do not accept such donations. Okay. Clubs will accept only membership fees. So that membership fees is liable to GST. Songs which you downloaded on personal capacity, nothing to do with GST number and business. Still, you have paid for those songs, not used for your business. 71B says import of services for a consideration, whether or not in the course of furtherance of business, still GST is leviable. If song is downloaded from India, how is it taxed? Same, if song is downloaded from India, the person who is providing you the song, okay, I'm assuming your case is when you're supplying, I'm a song, I'm like T series, I'm providing services of using the songs on a payment basis. So when I provide you this service, you will pay me. I will pay GST. I will collect GST from you and pay it to the government. Okay. Mohammed Waqib is saying when no consideration, 71C, related person plus FOB, this is supply. We'll come to that. We'll come to that. Let's go step by step. Sir, if that bottle broke within 200 nm, 200 nautical miles, yes. So 200 nautical miles, very good question, because India includes India plus territorial borders. So at the customs place, is it available or no is to be considered, because they will not come and see where it broke, right? The point is the customs frontier. When the customs frontier, is it there or not there, will be the relevant point. Okay. So we understood Schedule 1 without consideration is also liable to GST. Then 7.1 capital 7 subsection 1 we covered. Now 7.1a, where certain activities or transaction constitute a supply in accordance with the provisions 1 shall be treated either as a supply of goods or services as referred to in Schedule 2, which means certain activities, whether they should be treated as supply of goods or supply of services, will be decided by Schedule 2. Sir, you said the GST is a combination of goods and services. Then why this division between goods and services? Division is required. GST is still one law for goods and services, but still division is required because the rate of tax for goods is separate, rate of tax for services is separate. That is the reason this division is required. Otherwise, they don't want to divide it. Had there been only one rate for everything, then this section will not be there. But unfortunately, we still have division between rate of goods will be separate through a rate notification for goods, and rate for services will be given through a rate notification for services. That's why 7.1 and 7.1a, you have two different sections. So rate will be decided based on their classification under Schedule 2. Then 7.2 says, notwithstanding anything contained in 1, activities or transactions specified in Schedule 3 or such central government or state government activities shall be treated neither supply of goods nor supply of services. So 1 we know where there is no consideration, still it is liable, that is Schedule 1. Schedule 2 is classification schedule, saying that whether it shows goods or services, that Schedule 2 will tell. Then Schedule 3 will tell what? Saying that what are all the items covered under Schedule 3, they are neither goods nor services. They shall be treated neither as a supply of goods nor supply of services. Also, this governmental activities will be treated neither supply of goods nor services. So 7.1, 7.1a, 7.2 we understood. Then 7.3, subject to the provisions of 1.1a and 1.2, the government says on the recommendation of the GST Council, the transaction which are to be treated as supply of goods and not supply of services, or supply of services, not supply of goods. If the government gives a notification, then we have to abide by it. Okay. So what did we cover? We covered that what are the parameters of supply? It should be supply of goods or services. It should be for a consideration, and it should be in the course or furtherance of business. 7.1a. Then exception is where it will not be in the course of furtherance of business, still liable to GST. 7.1b said import of services, wherein of goods and services and should be for a consideration. Then exception for no consideration is 7.1c when it says goods or services, it should be in the course of furtherance of business. 7.1c says go to Schedule 1. Then 7.2 says transactions outside the scope of supply is Schedule 3. Clear till now? This is very important for us to understand and to proceed further. If song is downloaded from India, how it will be taxed? We have answered. Good. So we can now open up because some student was raising some question. You can unmute them. Okay. So let's proceed then. Songs imported IGST under RCM or not? Yes. If you are importing some songs, if you're using for your business, then you have a GST number, then you will pay under RCM. But there is also a category called online information database access and retrieval services, which means the person who is supplying, he is providing a online information database access and retrieval services. So it is in short called as OIDAR services. So OIDAR services provided outside India, he is compulsorily required to register and pay GST if he's supplying it to an unregistered person. So when I said on downloading of songs, not for um, business purposes, but for your personal use, also you have to pay GST. Don't get worried that you will have to pay GST to stop downloading. Their business will go off. You still can download it. GST will be paid by him. Your liability is not there. Okay. So some services will be like that, wherein they will pay the GST. Some services, because you're a consumer, you cannot register. The person supplying himself will pay the GST. Any questions, please?
गुड इवनिंग सर।
Yes, good evening.
सर मुझे ये जानना था कि जैसे अभी आपने बताया तो इसका मतलब ये हुआ कि एक बिल के अंदर जिसकी बिल मैं इंपोर्ट कर रही हूँ उस बिल के अंदर बहुत सारे आइटम है, उसमें से कुछ आइटम डिस्ट्रॉय हो जाए तो उन कुछ आइटम पे मतलब जीएसटी नहीं लगेगा ऐसा? इंपोर्ट पे मतलब इंपोर्ट ड्यूटी नहीं लगेगी? जैसे एक बिल है उसके अंदर बहुत सारे आइटम्स हैं, उसमें से कुछ आइटम डिस्ट्रॉय हो जाए तो जो डिस्ट्रॉय हुए उन पे इंपोर्ट ड्यूटी नहीं लगेगी?
करेक्ट, क्योंकि कस्टम्स ड्यूटी की बात चल रही थी, वो एग्जाम्पल बताना था मुझे कि लेवी कब लगता है। लेवी तब होगी जब उसका टैक्सेबल इवेंट ट्रिगर होगा तब। अगर टैक्सेबल इवेंट नहीं है तो फिर उसकी लेवी नहीं लगेगी।
तो मतलब उन आइटम्स पे नहीं लगेगी राइट सर?
करेक्ट, करेक्ट।
थैंक यू सर।
Another example given asked by Mr. Unni Krishnan is foreign consultancy services on a personal capacity. Good example, where a foreign consultancy services I procure on my personal capacity. Okay, on that I pay a consideration. Fine, I've paid a consideration. Will I have to pay GST on this? Yes. Once a reverse charge mechanism liability triggers, then I will have to register under GST and pay the GST. Okay, we'll get into the 8 terms of supply, and then we will go to, okay, we'll go to Schedule 1 first, because Schedule 1, Schedule 2, and Schedule 3, what we have said, we have to understand first. Schedule 1 says activities which are without consideration is still liable to GST. What are these? These are permanent transfer or disposal of assets. So if there is any permanent transfer or disposal of assets, then GST is leviable subject to these following conditions. First is the disposal or transfer should be of a business asset. If it is of a personal asset, then this will not trigger. Then the transfer or disposal must be permanent, not that a temporary transfer and you get it back. That is not the intention. They've said permanent transfer or disposal of assets. So transfer should be permanent, not a temporary nature. Then the input tax credit must have been availed on such business asset. If it's a blocked credit case or a input tax which you have not availed and now you're selling it, then this section will not trigger. You should have claimed the credit, and now when you're selling it, it should be without consideration, then this will trigger. Second clause under Schedule 1 is supply between related person or distinct person, which means if there is any transaction made between two related persons or one distinct person and another distinct person. What is distinct person? We'll come to it. That if there is any transaction between one related person and a distinct person in the course of furtherance of business, that is also liable to GST. Then even if there is no consideration, because related party mein kya hota hai? I do a transaction from one person to another person, and the consideration is not paid. Since we are related, or say branch office and uh, head office, they are example of a distinct person. In two different states, they are there. One is a branch, one is a head office. So they are example of distinct person. If they are doing any transactions, they will not exchange money, right? Because branch will pay to the head office, or head office has to pay something, they will adjust it. So their consideration is not important. Without consideration, also, if there's any transaction, that is also liable to GST. Third is any kind of transaction between principal to agent. And here it is only supply of goods, not supply of services. Then the last aspect is on importation of services. Importation of services we have separately, but here there is a separate special thing which says that any import of services from related persons or establishments located outside India. Okay, importation from related persons or establishment located outside India. If you're doing without consideration, that is also liable to GST. One is example of not using for business. Here it is using for business, but from a related person or any related establishment located outside India, that is also liable to GST. Clear with this? Yes, Mr. Onikrishnan. In case of registration, if you have to pay under reverse charge, then even if your turnover is less than the GST criteria, still you will have to register and pay the RCM. Then you get converted to a registered person. Your agent commission for supply of goods is taxable. Yes, any kind of commission for supply of goods is taxable. Good. Now we'll go to uh, Schedule 2 is a classification. Schedule 3. Schedule 3 which says that following activities will not be liable to GST. Okay. This is explanation of 1, 2, 3, 4. That's fine. Supplies without consideration is what we understood. Schedule 2 is a classification. Now, why this Schedule 2 is important is GST we know is one tax for all, but the rate of goods and services is different, hence it becomes important. Example, the rate on job work of a product is services. The rate is 18%, but if say the material is a steel, okay, I have a steel manufacturer. I give some work to a job worker. Who is a job worker? Who does some small work on my behalf. I give the steel rolls to him so that he can do the bending and give it to me. I cannot do the bending because I'm only manufacturing it. He will have to do the bending and give it to me. I will sell it to the customer. If I start doing the bending work, it is not feasible for me. So I give this manufactured steel plates to a job worker. He will do the bending work and he will give it back to me. The rate on the steel is 12%. But am I selling him the steel plates? No. He is neither buying it nor I am selling it. Property is moving, but the title is with me. I am still the owner of it. If he breaks it, I am responsible, right? So when I'm giving the steel plates, I'm not transferring the property in the goods. I'm only giving the goods to him so that he has to do some activity on it and give it back to me. If I sell this, the rate is 12%. So he is doing this bending activity and giving it to me. This he will charge some consideration. That consideration is called as a job work charges. So this job work charges what he does. On that, what GST rate he has to charge? He has to charge me the rate of services. So even though there is a transaction, but he is providing me a service. So he will have to charge me the rate on services, which is 18%. That is the relevance of Schedule 2. Schedule 2 says that this activity is of job work is a service. So he will have to pay GST on the services portion, not on the goods portion. Okay. We will discuss these examples. Let us understand things in a better manner. Now, Schedule 3. Before Schedule 3, there are some activities which says that what is not supplies. Schedule 3 is not supplies. Then anything what is given in a notification or clarification also is not a supply. Okay. What are the examples of non-supplies? Schedule 3 items. Then notifications and clarifications can also come, wherein they will treat it as a non-supplies. What are the things covered under Schedule 3? Any services by a employee to the employer. Employee provides his daily work to the employer. Employer pays salary. On that salary, that's why we will see on salary there is no GST because of this Schedule 3. Employee providing service to the employer and employer pays consideration in terms of a salary. On that, there is no GST. Services of a court or tribunal. Services of a court or tribunal is outside GST. Then services of the functions performed by MP, MLA, etc. are outside the scope of GST. Then any funeral, burial, or crematorium services. Okay, this is the last service which anybody can take in his life. So all those funeral, burial, or crematorium services is under Schedule 3. Sale of land is also there under Schedule 3. Sale of land subject to Schedule 2 5B. Schedule 2 5B says if you're doing any services of building on the land is liable to GST, but the activity of sale of land is outside GST. So sale of land is outside GST. Sale of construction, that's why you will see a lot of developers, builders coming in, and government is encouraging Firstly, real estate value will increase. Secondly, government will get tax on that also, because when you're doing a construction services, you are not supplying the raw materials. You are supplying the raw materials converted into a building. So it is liable to GST. But if you sell plain land without any construction of building, then it is only sale of land. On sale of land, there is no GST, but sale of building, there is a GST. Then actionable claims is also not liable to GST because it is excluded under Schedule 3, other than the following. What are the other than the following? Any kind of lottery, betting, and gambling. So on lottery, betting, and gambling, we have GST. Apart from that, other actionable claims are outside the scope of GST. Deputation of employee to other organization, that is called as Unnikrishnan, very good question. Deputation of employee to other organization, that is called as secondment. If there is any secondment and you are collecting any charges for that secondment, then GST will be level because that's a principal employer to employer arrangement. Okay, employee will get the experience, but it's a employer to employer arrangement. On that, if you're collecting any consideration, then GST is leviable. But if you're not collecting any consideration, then GST is not leviable. Okay, so that was Schedule 3 activities. So on lottery, betting, and gambling, GST is leviable. Highest rate, 28% will be levied. Apart from Schedule 3, what are the exemptions, notifications, and clarifications? So there are two notifications which have come. First is any panchayat or municipality functions, which is done by the municipality and the panchayat. Okay, those are non-supplies. Then alcoholic liquor license. Alcoholic liquor for human consumption, we saw in the previous chapter that GST is leviable and state taxes is also leviable. But this is not alcoholic liquor here. The license which is being given, okay, the license which is provided by the government to run a liquor license, okay, the liquor license which they give on auction, that liquor license is not a supply. Okay. Then clarification, they've said that if there is any interstate movement of conveyance between distinct persons, I'm supplying one lorry from head office to the branch office, and that lorry will use for movement of goods, that is not a supply. Then interstate movements of rigs, tools, spares, and goods on wheels. Okay, so anything of this rigs, tools, spares, and goods on wheels supplied is also not liable to GST. Okay, so that was on major aspects of GST. In our next session, we will get in detail of Schedule 1, 2, 3. What is the meaning of goods? What is the meaning of services? Then somebody was asking what is a composite supply and a mixed supply. That also we will discuss in the next session. So any questions on the chapter of supply, what we have studied till now? Sir, is GST levied on commission to broker? Yes, commission to broker also. The broker has to charge GST if his value exceeds the threshold limit. So if the broker is getting brokerage more than the threshold limit, what is the threshold limit? For goods, it is generally 20 lakhs. And for services, it is 20 lakhs. And for goods, it is generally 40 lakhs. Then you have some special category states. Special category states will have special rates. We will discuss that in registration. But for your understanding now, the limit generally is 20 lakhs for services, 40 lakhs for goods. Now, this broker who is charging you commission, he's providing you a service. That's why you're giving him some commission. The terminology is commission, but it is still services. Then on that, he will have to charge GST if he crosses the limit of 20 lakh rupees. What is the goods on wheels and why it is not a supply? We'll get to that. We'll get to the circular. There is a circular which says that any kind of movement of rigs, tools, spares, and goods on wheels, which means while they are in transit, if some supply is happening, okay, for repair work, then that is not liable to GST.
सर जो बिल्डिंग मतलब फैक्ट्री की बिल्डिंग अगर सेल करेंगे तो उस पे जीएसटी आएगा, जो वो सप्लाई माने जाएगा?
फैक्ट्री बिल्डिंग बनाने में
नहीं सर, सेल करें माने कोई फैक्ट्री की बिल्डिंग सेल कर रहे हैं तो वो सप्लाई माना जाएगा,
तो
जीएसटी
एक बार
लगेगा?
बिल्डिंग बन गई तो वो इमूवेबल प्रॉपर्टी बन गई, ठीक है। और
ओके।
इमूवेबल प्रॉपर्टी पे आपको जीएसटी नहीं लगता है, ठीक है। तो अगर बिल्डिंग बनने से पहले जीएसटी लगेगा, बिल्डिंग बनने के बाद जीएसटी नहीं लगेगी।
बनने से सर लैंड पे जीएसटी नहीं है, लैंड शेड्यूल 3 में आता है, फिर
करेक्ट।
बनने पे कैसे कंस्ट्रक्शन पे लगता है जीएसटी, इसका मतलब?
कंस्ट्रक्शन एट द टाइम ऑफ कंस्ट्रक्शन लगता है। कंस्ट्रक्शन खत्म होने के बाद ऑक्यूपेंसी सर्टिफिकेट मिल जाता है या वो फिट टू ऑक्यूपाई हो जाता है, तब वो इक्वलेंट टू इमूवेबल प्रॉपर्टी बन जाती है।
नहीं लगेगा।
तो वैट जीएसटी नहीं लगता है। ओके, सो वी कैन वाइंड अप, अजित जी। Alcoholic liquor license, yes. Question on alcoholic liquor license is that when you have to sell a alcoholic liquor, you just can't sell it. Unlike other goods, you have to get a license from the government. So for this, getting this license, you pay some consideration to the government. This is not a supply. That selling of liquor license is not a supply, is what is given through that notification. Then 5% GST is applicable on ready to move in flats. Correct, correct. 5% GST is applicable now. Okay. Thank you very much for the patient hearing. In next class, you can prepare yourself for the concept of supply. And if there's any questions after our deliberations, you can please put it up. Supply is a very important chapter, so request you that you read it, and then we will have a good discussion in the next session.
थैंक यू सर।
Thank you. Thank you.
Okay, thank you.